In market news now, European stocks were subdued as losses in tech shares offset gains in consumer staple stocks ahead of key Eurozone economic data that's due later in the day. However, the main focus remains on the U.S. Federal Reserve's monetary policy decision tomorrow, where the central bank is widely expected to hold interest rates. However, all eyes will be on its economic projections and how many rate cuts it estimates for the year. Locally, Ramgro's interim headline earnings fell 40% in what the investment holding company called an incredibly challenging operating environment. It said a significant driver of the decline in headline earnings related to the effect of recent corporate actions. The difficult operating environment, particularly in relation to the trading results of Heineken Beverages, also contributed to the material decline in headline earnings. To give us perspective on the markets, we are joined by Martin Smith, who is from Anchor Capital. Martin, thank you so much for your time. I suppose one of the big stories that we've got to start with is the Bank of Japan's policy measures coming in as expected. But let's start off with market reaction to that, because we saw a fall in yields, stocks and currency. What drove that?
Japan's been in a slightly different position than the rest of the world, where they've been fighting deflation as opposed to the rest of the world fighting inflation. So for the first time since about 2007, they've changed their rates, and it's now gone from negative to between 0 and 0.1%. So a lot of moving parts, but essentially now yields are relatively unchanged, but you have seen the yen fall about 1% since that move happened.
The other, news that we're talking about is the Fed meeting tomorrow. And as I mentioned in my intro, we're expecting them to leave rates unchanged. But what do you believe is the biggest overhang when it comes to a question here going into that Fed meeting?
Yeah, I'm on the same page as you. I don't think you'll see any change in the meeting this month or the next meeting. I think it's about 50-50 if they do anything with rates in June. So I don't think we'll see anything, but what will be interesting is they'll release their economic data points to see where their views are around inflation and growth and the like. So I think they'll give a bit more insight into what may come through in the following months. But for this meeting and the next, I don't expect anything actually.
The one thing I've been asking a lot of the analysts coming on the show is whether there is actually a risk that the Fed wouldn't cut rates at all this year. Where do you sit on that?
I don't even want to think about that, because I don't think that'd be too good for markets. I think the data is always a bit of a moving target, but I think things are definitely pointing in the direction that inflation is easing. Things are starting to come off. Yes, there's stickier pockets of the market, but I think you will see rate cuts. It just is a function of when it happens for the first time and how many there are throughout the course of the year. And again, it's been such a moving target. If you looked 2 months ago or 6 months ago, you'd have completely different views of where that would happen. So I think it is very important to look at it data point by data point, but it's very much our view that we will see interest rates cut. This depends, again, when and how many.
Let's talk about Ramgro for a bit. I mentioned that they released their earnings earlier this morning. The share price is down about 3.3%. What did you make of the numbers brought forward by Ramgro?
So you mentioned that headline earning number down about 40% year on year, but if you exclude a lot of kind of one-off corporate actions and corporate events, it's down about 13%, largely a function of a big special dividend out of FirstRand last year. The Heineken business also did very well last year. So a couple of moving parts. Discount, which is also a big part of how you value a business like Ramgro. The discount to NAV is now sitting at about 40%. After the fall we've seen in the last couple of weeks or months, shares down about 15% year to date. And 40% is probably a bit more reasonable to get in. I think 31 maybe seemed a little bit full from a valuation perspective. But again, I think the whole of South Africa is operating in quite a tough environment at the moment. But I think 40% discount to NAV is probably fair.
Let's talk Discovery. They released their trading update yesterday. It seems to have recovered from the close down 7% yesterday, but it's come up 3.25%. Let's talk Discovery in terms of its share price performance, because some would say, well, it's trading at the same level since 2015. So what's the appeal here? What do you make of Discovery's share price performance?
Yeah, I mean, you're right. It was about 120 at the beginning of 2015, probably topped out at about 180 in 2022, low as about, I think, 60 in COVID. So it's definitely been a kind of up and down, but sideways move on Discovery. And I think the thing that the markets always look to Discovery has always been the blue sky kind of potential of all the initiatives that they're doing and rolling out. And those things obviously have J curves and they take time to come through. And I think that's always the biggest thing with Discovery. Very well run, very operationally good business, but you've got a lot of initiatives that need to start to pay dividends. And I think the appeal has always been that comes through at a later stage. So if you buy it at the right valuation or the right price, you can get a nice uplift, but also the potential from a kind of medium to long-term potential. So I think that's the appeal of the business on a longer-term basis.
We've had quite a few companies release their earnings locally, that is. What did you make of some of the guidance that was coming out of those numbers, or at least earnings expectations?
So I mean, every industry and every business is different, obviously, but I think the common theme that you've seen throughout has been talk about the fact that South Africa is got a lot of headwinds from a GDP perspective, consumers constrained, high interest rates, load shedding, putting a bit of pressure on earnings as well. So you've got those things really kind of coming through from a message perspective and going forward. It's basically saying we're operating in a very, very tough environment and some headwinds. But hopefully we're starting to see that kind of bottom out. You're seeing interest rates start to come off towards the back end of this year. Hopefully the load shedding thing also starts to sort itself out and everything starts to improve. And I think that's the big question, right? Is are we towards the bottom of this type of environment and things start to improve from here, or do we still have a little bit of pain to go?
With that said, as we wrap up, are you seeing opportunities in the local equity market?
If we are seeing the bottom and things do start to improve from here from a macro perspective, then absolutely. Again, given the valuations on the JSE, things are looking very, very cheap. So you've got a cheap market and hopefully a recovering economy or kind of backdrop. Could be quite a nice way to make money on the JSE, especially if you get a bit of an emerging market kind of kick from global investors. But then there is also the question of, is the market cheap for a reason? So it's a difficult one to call. I'm probably a little bit more positive than most on the JSE.
All right, Martin, thank you so much for your time. That is Martin
Thank
Smith
you.
from Anchor Capital giving us his perspective on the market.